right? Where all of his competitors were preying on his downfall, but Cornelius Vanderbilt had the train that ran through New York. He put a dead end or something, a blockage, a roadblock, where the trains couldn't go through. It caused his competitor's stock to fall because he had the gateway to go through that side. And what happened was they was trying to force him out. So he said, all right, y'all want to force me out? I got something for y'all. And so when all their stock fell, he went and bought all of their stock and became the sole owner of all the railroads in America. He became the sole owner of those stocks. He owned more than 51%. And then once he took sole ownership of the companies.
How would you like to be at least 30 minutes ahead of everyone when it comes to massive market moves? Sound good? Trades like this one that could have earned you 118% in 4 days, or this one that earned 147% in 2 days, or this trade that could have earned you 270% in 4 days. It's possible, and right now you can get alerts to trade like.
He lifted the barricade, let the trains go through, and that's what made him the richest man in America. That was crazy when I saw that. But it also lets you understand the power of the stock market. So again, how does it work? You are, as an individual, or they will call us retail investors, you have the opportunity to buy shares in companies. Now, there's three things I want you to understand about the stock market. There's three very important people we got to understand. One is the market maker. Two is the investor. Three is the trader. These are three different identities that are on the stock market. The market makers are your people who work inside of the exchanges, and what they do is they play two sides of the coin. In the street, we say they play both sides of the field. So what they do is they create what's called a buy or a bid price and an ask price, right? They create a bid price and they create the ask price. And when they create that, they are the middleman between two people who are going to decide how a stock moves. They get paid on what's called the bid-ask spread. So if the buy person has this, if the bid person has a price, the ask person has a price, the person in the middle, the market maker, is a seller, right? He makes sure the deal get done, and he gets paid from that spread in between. So again, let's say the bid person says $1.50, the ask person says $1, and they decide on that. They decide on selling it for the dollar, whatever. That middle price, what they agree on, that is what the market maker gets his money from. They don't care if you buying or selling as long as you have some type of activity, because the market maker wants to get paid from your activity. Next, you have, they don't care if you buying or selling as long as you have some type of activity. There's three things I want you to understand about the stock market. There's three very important people we got to understand. One is the market maker. Two is the investor field. So what they do is changes, and what they do is they three different identities that are on the stock market. The market makers are your people who work inside of the exchanges, and what they do is they play two sides of the coin. In the street, we say they play both sides of the field. So what they do is they create what's called a buy or a bid price and a ask price, right? They create a bid price and they create the ask price. And when they create that, they are the middleman between two people who are going to decide how a stock moves. They get paid on what's called the bid-ask spread. So if the buy person has this, if the bid person has a price, the ask person has a price, the person in the middle, the market maker, is a seller, right? He makes sure the deal get done, and he gets paid from that spread in between. So again, let's say the bid person says $1.50, the ask person says $1, and they decide on that. They decide on selling it for the dollar, whatever. That middle price, what they agree on, that is what the market maker gets his money from. They don't care if you buying or selling as long as you have some type of activity, because the market maker wants to get paid from your activity. Next, you have the investor. Now, these may be some of your big companies. right? They're the people who are putting money in the market and they are looking for a financial return on that investment. These are the people who buy companies and they are creating like your 401ks. They're the people creating your retirement. There can be people managing your portfolio. They're looking to make money over a long period of time, right? So this is why you have wealth management companies. This is why you have what we call hedge funds, mutual funds. These are the investors. And then you have a third identity, which is the traders.
If you click this ad right here, I'll teach you a little known trick for finding low price stocks on the verge of moving higher. And all.
So the traders aren't looking to hold on to companies for long periods of times. They're often looking forward to making money on some type of momentum or a stock going either way. It is possible for an investor to also be a trader. It is possible for an investor to also be a trader. So I'm telling you this because I need you to understand how this game is being played. Because once you understand how the game is being played, you can then play the game at a high level. Now, in order for companies to get on the stock market, what do they have to do? They have to do what's called an IPO, which is what? An initial public offering. This is when a company says, you know what? I don't want to go in debt with the bank. So you allow your company to go on the market, and then you're allowed to sell shares of your company to individuals. And then your goal is to take that money and do what with it? Build and expand your business. Now, another thing I want to talk about when it comes to the stock market is regulation. Now, we talk about the rules that have to be abided by. When we think about insider trading, so people always have the wrong concept and the wrong idea about insider trading. So insider trading is not a CEO of a company selling his shares. That's illegal. The insider trading that's illegal is when the CEO tells somebody else some news about why he's selling his shares because he feels like something is about to happen, and boom, now you cause a chain reaction. That is illegal. Like also having some information about a company and then giving that information to someone so they can buy or sell shares. That is illegal. But me being a CEO of a company and me selling my shares, that type of insider trading is legal. So I want y'all to stop panicking when y'all see or hear something like that. So I'm glad we talked about the IPO because here's something I really want you to know. There's also two different sets of markets. There's the primary market and then there's the secondary market. The primary market is when a company goes IPO. This is when your banks, the government, large financing groups, they can get companies through debt-based financing or equity-based financing. This is when banks can, when companies can issue out their IPO shares to again finance the company. This is when everything is sold through IPO, and so often you'll hear people say they're in a lockout phase. That's the primary market. I ain't gonna lie to you. That's when you won't get in the game. That's a whole different ball game if you can get in the primary market. So the primary market is where you get new stocks, new bonds for first time issuance, right? This includes IPOs, private placement, and rights to issue. That's something else we'll get into. So the primary market is where the shares initially go to when you have the idea that you want to go up and be a public company. Also, this is where your banks do the underwriting at, right? When they give your company an actual evaluation, they tell you what the shares going to cost. That is the primary market. The secondary market, people often get confused. This is the NASDAQ and the New York Stock Exchange, right? That's not the primary market. That's the secondary market. That is where the shares get buy and sold through traders and investors like us. This is where we get in as the public. I'm gonna say it again. The secondary market is when we as the public can get in. We can buy, sell, we can trade. This is when all that happens. This is when your market makers come in. None of that happens in the primary market. Everything, all of that happens in the secondary market. And that is where we get at. Now, if we want to get in that primary market, then you got to get into, you know, investing in startups, being accredited investors, things like that happen. But the primary market is definitely also where massive wealth is attained. I'm not gonna lie, this is when Kobe and Nas, this is when they got in those companies early before the Jay-Z got in Uber. You know, all these people get in these companies before they go public. I'm not gonna lie to you, that's it. That's how you become 9 figures. That's how you go invest like $1 million in a startup company. You get in a primary. Now I'm gonna be real with you. You gotta know somebody to get in that market. It ain't easy to get in because they know this the billionaires club. This how you become worth 9 and 10 figures right here. But let's get back to what we were talking about. So we talked about IPOs, we talked about primary markets, we talked about secondary markets.
As a center admin, I've seen a lot of different people come through here. We had a student come in, he signed up for the course, and he's actually now coming in regularly for our labs. He's really trying to kind of put what he's learning back into his community. And so he's investing really not just only in himself, but also the people around him. And it's just really great to see.
Register now to attend our free in-person workshop and gain the confidence to trade like a pro.
Seating is limited, so click the link to sign up now. I'll see you there.
Enemy submarine spotted. Attention, reporting the target position. Enemy heavily damaged.
These things are important for you to know. Now, how does the stock market work? The stock now has to be put on the exchange. I have to say where it's going. But also there's the Russell 2000, right, which is your smaller cap companies. The stock now gets placed somewhere. There's also the Chicago Stock Exchange. I almost forgot to talk about that. The Chicago Stock Exchange is not well known. It's about a $50 billion market. But they do a lot of ESG, clean investing, things like that. But your main ones are gonna be the S&P, the NASDAQ, the Dow Jones. So now the stock, the company is placed on an exchange. Once it's placed on the exchange, now the company's goal is to provide value. As the company continues to provide value, investors like myself now say we want to buy this. Once we say we want to buy that stock, the market maker comes in and say, okay, Wall Street Travel wants to buy 100 shares of XO dog food. He wants to buy it for $198. He goes and buys for $198. Somebody say, yep, I'll sell it to him for $198.75. The market maker takes that split from the middle. I now get 100 shares. So I want you to know this. Every time you go to buy a stock, someone on the other side is selling you that stock to a market maker, and then you get it. So you don't just press buy and then it's gone. You have to press buy, and it has to find somebody who's selling those shares to you. This is why liquidity is important, because if trading, this is going to be important. If you're trading, this is why your open interest is important, because if a company if that stock price has low open interest, you'll see your trade get stuck in the queue. It'll say, we've placed your order and nobody ain't bought it yet. Understand that buying and selling stocks, there always has to be a buyer and a seller in order for that stock to go. Now, here's the next thing. Good news and bad news can make stocks go up and down. Investor emotion, or how a person thinks something is going to happen, because the stock market is a forward-looking mechanism. So how a person thinks about this stock in the future is how it responds today. How a person thinks that a stock is going to move in the future is how it responds today. There's bears. Bears are typically investors who are bullish, meaning they think the stock is going to go down. And then there's bulls. Bulls are optimistic. They feel like there's always a reason why the stock market can go up. Bulls often have opportunities where they can take profit. Now, taking profit can also cause the stock market to go down. So after the stock market goes up for a long period of time, people start to take profit, and that can cause the stock to go down, because as you sell shares back to the market, the stock goes down. As you buy shares of stock, that means less shares of that company is on the market, and that causes the stock to go up. That is supply and demand. Oh my God, I hope y'all enjoying this right now. Okay, let's rewind that a little bit, because I think you need to hit that again. Fear is when people are selling stock. They're getting rid of it. They want to get their cash. Greed is when people are buying stock. That means people want to own it. The more people want to own something, guess what happens? The stock goes up. So the more people want to own it, the more value that this company is bringing, or the more optimistic people are about the future of a stock, the more it goes up. Now, you don't have to be a bear, but even bulls find price points where they feel like, you know what? This stock is what's called overbought, meaning a lot of people have bought into it. Let me take some profits to put it on the side. Once the bulls start taking profits, the stock starts to come back down. As an investor, that is not the time for you to panic. I want you to know that. This provides buying opportunities. So remember this, there's bulls, there's bears. There's market makers, there's traders, and there are investors. All of those people play a role in how the stock market moves. And then you have the whales. And so the whales are a combination of investors and traders who are now putting millions and billions of dollars into companies, and the stock goes up, and millions and billions of dollars, they're selling the stocks go down. Man, this is a great video. I truly hope you enjoy this video. I want you to like, I want you to comment, I want you to share this, because once you understand how this market moves and what makes the market move, you will truly, truly, truly be on your way to making a lot of money. It's your boy, the Wall Street Trapper. Make sure you, again, like and subscribe, comment in the chat, tell us the type of content that you want from us when it comes to this, but also check out our show, Trapping Tuesdays, each and every Tuesday at 7 p.m. Eastern Time on the Wall Street Looks Like Us Now network. It's your boy, the Wall Street Trapper. Salute.
We have something cool here. What you're looking at is the new Spediance home gym. This one is called the Gym Monster 2. And look at how small it is. This actually ships to you basically assembled. A huge bonus for fitness equipment in general. They can be a real nuisance to build. This thing folds up, it takes up barely any space, and you can get up to 200 pounds of resistance using magnets. I should just go ahead and drop this deck right now. Single button. Drops down, and this is going to be the central point for your variety of movements. And if you do want to do a bench press or something, this is where your bench is going to live. You simply lock these guys into place. It's kind of wild because you think about 200 pounds of weight, and it is different. This is resistance. It's not free weights. It does feel a little bit different. The amount of space you would need for 200 pounds of weights, if they were dumbbells or something, it's all in here. This is all magnetic resistance housed down here. And then the other unique part is through this huge display, there's a variety of exercises that you can do on this unit, which allows you to get obviously a full body workout here. You can also do free lifts, which in here there's a variety of different dynamic weight options, standard chain, eccentric, and fixed speed, and they all feel way different, and they could all be used for different types of training. You also have partner mode if there's two people working together. You have dumbbell mode and barbell mode, and that's where the accessories come in. So we have our barbell attachment. We can use this for bench press. We have a couple of other resistance attachments, the handles, the rope, these can all be added for a variety of different exercises, straps for the legs. And we've also got our bench, obviously, so it will sit on top of that platform, and it has some level of adjustment to it as well. This is pretty wild. You can add to this to make it have even more variety. So if you want to get a little bit of cardio and strength in, you can add this rowing attachment. There's also a dedicated spot for if you're rowing, if you're using the rowing attachment, so that it's going to be at the right height. But look at how quickly you adjust this. I mean, you simply pull on this piece and slide this section to whichever height you need, depending on, well, your own physical size, and then also whatever workout you're trying to do. Mo really likes this thing, to be honest. He's been really into this since we've set it up, and he's been playing around with it, and he's actually going to help us do some demonstration here as we talk about it. So you have it at a level 3 for resistance right now. Oh, took it up a notch, 6. What if we want to be on a canal rowing instead because we want to have a beautiful visual? We can do that too.
3, 2, 1, go. When doing this action,
the amount of weight is adjusted here, so I can either do this on screen, but there's also an accessory remote that fits on your finger, and that allows you to adjust the amount of resistance in real time. Look, I just have this toggle wheel here, and so therefore I don't need to try to reach up and reach the screen, and this can be especially useful if you're trying to push a lot of resistance. You just dial it back, eliminate the weight. This is flexibility that obviously you're not going to get with free weights. Okay, so now we're in the free lift mode, and this is where the ring is helpful. So by clicking it, you actually turn the weight on or off quickly, toggle it off or on. That's obviously not as important in this type of exercise as opposed to
Didn't you that kept on swallowing it? Come upon me.
Can I show you an insanely good risk-reward trade? You see, it's actually joining the vault right here, which is my free community with over 17,000 members in it. Now, the risk to joining this is 0, and the reward is unlimited. Because not only are you going to get access to 5 different courses going over the exact secrets that smart money uses to trade, you're going to see my 6-figure trading coaches trade live every single week right in front of your eyes. And again, all of this is completely free. There is 0 risk to joining this group right now. You can see the students have been crushing it inside, simply using the strategies and tools in here. And if you want to join, click the link around the screen to join right now. I'm going to make it paid soon, so I would join now while it's free and get lifetime access to it. I'll see you inside.
I have 11 minutes to explain day trading. So naturally, I'm gonna put $60,000 of my own money on the line. What could possibly go wrong? A lot. A lot can go wrong. Day trading is basically a game of patient people taking money from impatient people. But it's also a game of chance. To understand this game of chance, I'm personally putting $60,000 of my own money on one single trade using this exact strategy I'm about to share with you. Will my own strategy actually succeed? Or will I lose $60,000 in the matter of seconds? Either way, I guess it's content. It's now Wednesday. I woke up at 7:30 a.m. today. I'm in Texas. So, market opens in 1 hour. I make sure I'm zooted on caffeine, and then I proceed to spend the entire morning scrolling through my trading scanner until I find the one. I set up all my strategy parameters. Tactics, tactics, tactics. I precisely set my limit order, then I do the most important step, and that is to wait patiently until price hits my order. Holy f***, it just hit my order.
Autofill, 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 autofill.
You see, day trading isn't easy money. I'm sure the only reason you're even watching this video right now is because you saw some rich TikToker talking from a helicopter about his Lamborghini that he got from trading stocks.
Here in my garage, just bought this new Lamborghini here.
But let me tell you something you already know. The world ain't all sunshine and rainbows. In fact, most day traders actually lose money.
What? People lose money while day trading?
Well, yeah, the majority do. It's a known statistic that only 3% of day traders make a profit, and only 1% actually do it consistently. So, in order to make money, you have to become part of the 1% of traders. And how do you become part of the 1% of traders, you may ask? Doing exactly opposite of what the 99% are doing. You see, it's pretty simple actually. If 99% of traders are not profitable, that means if you do the exact opposite of what they are doing, you'll make money. It sounds stupid, but it's true. In order to do this, we're going to use one of the core concepts in our strategy, and that is liquidity. In order to understand liquidity, we first have to understand how the big billion-dollar institutions trade, or in other words, the 1%. Now, unlike you and me, where we can simply just buy wherever we want, big institutions can't really do that. They are dealing with so much money while trading, there are simply not enough sellers at the price where they want to buy at. So what do? They create the sellers themselves.
But how did they do that?
By doing a little thing called manipulation. Have you ever seen this happen? Price is coming down to a recent low, a key support area. Now, what's happening at this low is very simple. Normal retail traders like you and me are seeing this as a key support and enter when price comes down to here, thinking the price will bounce up and support, so where better to place your stop loss than right below this recent low. That's a pretty normal trade. As being the normal retail trader you are, you would assume if price crossed this low, it would be considered a downtrend, lose all of its momentum, and keep crashing downward. Now, the institutions own this stock already, but they want to buy more of it. But since they are trading with hundreds of millions of dollars, there is simply not enough sellers at this price for them to buy from. So they need to create the sellers themselves. So what they'll do is start selling their own shares to artificially drive the price down. They will make it seem like the stock is losing lots of momentum, crashing downwards, when in reality it's not. Other retail traders will see this and start selling as well, which in turn drives the price down even more. It will do this to the extent of passing this recent low, which will trigger all of these stop losses that we were talking about before. So now there are tons of people selling, trying to get rid of what they are holding, which means the institutions can now enter at the price they want since there are so many sellers. Price hits these stop losses, institutions buy a fuckload of shares, and price starts heading in the original direction it was meant to, making institutions billions of dollars. That is liquidity. Now, the trade we just took broke all-time highs, then reversed back downward. So instead of sell-side liquidity like the last example, this time we got buy-side liquidity. It's the same concept, just reversed. So this is why we are looking to short. If you don't know, instead of making money while the price is going up, shorting is where you make money as the price goes down. Price breaking this all-time high is our liquidity, and actually all-time highs are usually the most aggressive types of liquidity. And this is part of the puzzle of how we become part of the 1%.
Extra value meals are back. For just $5, get a savory and sweet sausage, egg, and cheese McDonald's, hash browns, and a coffee. Only at McDonald's. For a limited time only, prices and participation may vary. Prices may be high in Hawaii, Alaska, and California, and for delivery.
But just because we find liquidity, that doesn't necessarily mean we found a good trade. Now, the 1% not only know how to find liquidity and even target liquidity, but they also know how to find perfect spots to enter the trade. In order to know where they enter, we have to understand one key thing. Retail traders don't move the price, the institutions do. Now, sure, me and your pennies could possibly move the stock price a smidge in the grand scheme of things, but the majority of price movement comes from hedge funds, banks, banks and institutions. That's where the price really moves. We can find where they're entering by finding key levels of supply and demand. To do this, go to the 4-hour time frame. Find the start of a strong move. Mark the low to the high of the candle that started this move. This is your area of demand. You can do the exact same thing with areas of supply. Find a strong move downwards, find the first candle that started that move, mark the low and the high of that candle. This is your area of supply. The reason we are doing this is because we want to be entering where the big institutions are entering. And if price spikes up strong from this price, that means the institutions are probably entering here. So we would wait for price to come back down to the zone, enter here, where price is likely to spike up again, and we make all of the profit. So if we go back to our trade, we already grabbed the liquidity at the all-time highs. Next, we need to mark our area of supply. We mark the first candle that started the downwards move. This is our area of supply, and we must wait for price to enter into the zone again, and we enter our short trade. Now, just because we have liquidity and supply, that doesn't necessarily mean price will follow exactly what you think it'll do. You need another layer of confirmation, and that confirmation is a narrative. Now, narratives come in all shapes and sizes. It could be a sector that has a lot of potential, like AI. It could be good economic news, Trump makes another tweet, or it could be overhyped. Now, this play is QBTS, and they are a quantum computing company. It's been going crazy this past month or so with all the AI hype going on recently. Now, to be completely honest, I really do believe in this company. I think quantum computing is the future, and I think it's a really good company for that. And I actually traded this exact stock a couple months ago, but the last trade I was in a long trade. I used this exact same strategy, just flipped around. I entered in around $4 and sold around $18. It was my biggest trade to date, and I posted it live in my Discord group. But with that said, I think it's extremely overpriced at the moment. For example, this company is still in its early stages. They are actually losing money at the making of this video. Now, sure, they could be reinvesting into the company to make it stronger for the future, and just because they don't have a net profit doesn't necessarily mean it's a bad company. At the making of this video, AI stocks are going absolutely bonkers, and anything related to that is going up along with it, even if the company isn't necessarily making money. Like, just look at this chart. This screams speculation, and on top of that, it's valued at $5.3 billion with a B. So yeah, I think this stock is overvalued at this point. I don't think this is a long-term short in any way, but I do believe at this very moment, it's a speculation play for buyers, and speculators get scared very, very easily. And if buyers are freaking out as the chart goes down, that'll just add the momentum of the stock to plummet, which in return, our short trade makes money. So we found three main things: liquidity, an area of supply, then a narrative. So now that we know how I'm trading the stock, now is the time to put my money where my mouth is and enter into the short trade for $60,000. Here's the plan. Like I've stated, we were patient enough to not only find this play, but to get a liquidity grab and a key strong supply with this candle right here. As I'm editing this now, it's now Wednesday. Price just entered into our area of supply, so we can finally enter into this trade. To be completely honest, I'm kind of nervous. This is definitely a more volatile stock, meaning when it goes up and down, it goes up and down a lot. But I'm gonna stick with the ideal facts and play the game of probabilities and enter into this trade with 60 grand. We're gonna set our stop loss above these highs. Our entry price was $19.13, so if price decides to go up from here, we'll lose around 7%, which is roughly around $4,200. I can buy a lot of cool things with $4,200. But if this trade goes in the other direction, we'll play it safe and are going to sell 50% of our position at this area of demand right here. And we'll sell the other 50% of our position if price breaks these lows and targets these previous highs. If price hits our first target, we'll make around 24%. And if we're selling only 50% of our shares at this point, we'll make around $7,500. If price goes all the way down to our second take profit, we'll make an additional $9,000. So if this trade plays out correctly, we can make a total of $16,500 in one single trade. Let's see what happens. It hit our take profit. Price is now at our area of demand, and we sold 50% of our position for a profit of around $7,500. I'll be posting watching this video now while I'm still in the trade, for now, we're in the profit, and hopefully price can hit our second target. If you're watching this video as I upload it, in no way am I saying you should short this stock now. It's probably too late. If you want to see all of my trades live, I posted this exact trade and many others just like it live in my Discord group as I'm entering into them. I give where I'm entering, where I'm exiting, and basically all the information of why I'm entering into the stock in the first place. So yeah, there's that. If you're interested, I'll leave a link to my Discord in the description. But yeah, that's how you trade stocks. Try it out. See you next time.
Here in my garage, just bought this new Lamborghini here.
Can I show you an insanely good risk-reward trade? You see, it's actually joining the vault right here, which is my free community with over 17,000 members. Now, the risk to joining this is 0, and the reward is unlimited. Because not only are you going to get access to 5 different courses going over the exact secrets that smart money uses to trade, you're going to see my 6-figure trading coaches trade live every single week right in front of your eyes. And again, all of this is completely free. There's 0 risk to joining this group right now. You can see the students have been crushing it inside, simply using the strategies and tools in here. And if you want to join, click the link around the screen to join right now. I'm going to make it paid soon, so I would join now while it's free and get lifetime access to it. I'll see you inside.
Contact, all taps to secure the fire, engage the enemy. Fire.
Hey, in this video, I'm gonna show you how to become $1 million trader. That's right. I'm gonna show you how to become $1 million trader. Now, a lot of people are gonna say it's not that easy, Trav, because he leaving a whole bunch of stuff out. Here's the blueprint, and you tweak along the way. And matter of fact, the person who tells you it's not that easy, I have proof that I made $1 million in a trade. Actually, 1.2 million. Last year, 1.2 million in an NVIDIA trade. That's a fact. It's on my thing. I came right back and made, later on in the year, I made $860,000 to put the down payment on this building that I'm standing in. I used it for the market. I documented everything. It's on my Instagram. As a matter of fact, I can't put it too big. Closing time! So we see what's going on with McDonald's. So they listen, 10 people hospitalized. Hold on. Yo. What's up, Drew?
How you doing?
Man, I'm good, bro. Talk to me.
Hey, Trav, it's closing time.
Come on. You kidding me?
I want you to wire the down payment for your $5.6 million building.
How much they need, bro? How much they need to close? You're doing 20%, right?
I need about $850,000.
Oh, yeah, because they're giving us the credit for the 275.
Freedom Center.
Freedom Center. Man, I'm about to do something crazy, bro. I'm about to wire the money out the stock market. I'm about to cash out some profits from the stock market. I'm gonna wire that to my bank account, and then I'm gonna wire that to her. That way I'm using profits from the stock market to buy an asset, bro.
Hey, Wall Street paid you.
Watch this make sense, Jose. This year, we've made more than $2 million in the market. We've profited so far $1.6 million. We're gonna put up $810,000. So actually, I got the building for free. That's all house money, cuz. And then watch what I'm gonna do. Every year, I'm gonna take $100 grand out the market and put it on the building. I'm gonna probably put about $500 cash into renovating the building before the year out. And guess what? The whole $500 cash is tax deductible. That's how you play the game at a high level, my dog. All right, we gotta cash this money out. All right, bro. So now we gotta go get $800,000 out the market. We gotta sell what we holding heavy at. And one of this meta contract is up. We gotta sell 8 of them. So that puts us at $430,000. So we gotta hit this NVIDIA. We got to. So right here, boom. I think I'm already at the mark right now. So as we can see, we about to wire $25,000 transaction fee from an individual broker. And then what we doing is we going to wire right here $820,000. This about to be crazy. I know it'll take a couple minutes. I just wanted to make sure that the wire is good.
Yeah, everything's fine. Mr. Howard.
All right. Thank you, brother. I appreciate you. Let's go. So, Jose, we just sent the wire He said it should take about 15, 20 minutes. Let's sit on that for a second. And then what I'm about to do now is I'm about to look for the lady wire information. All right, so my name is Leon Howard. I am trying to wire some money for closing. We have a closing Monday with you all. Could you all email me the wiring information?
And I'll get her to send those right over.
Okay, thank you. Closing date. I think we 5 days away. So for the person to tell you it's not that easy, you talking to a person who did it. Right? You talking to a person who did it. So when I'm telling you this, I want you to, don't take this with a grain of salt. Take this exactly for what it is, because if you follow these blueprints, you can be $1 million trader. It's gonna take some time, because the thing you're gonna have to get around is your emotion. That's the thing that's gonna hurt more people, the emotion. And you're gonna lose money along the journey. But here's my favorite saying. In order to make $10,000, you gotta be willing to lose 1,000. In order to make 100,000, you gotta be willing to lose 10,000. In order to make 500,000, you gotta be willing to lose at least 100,000. And in order to make $1 million, you gotta be willing to lose at least 200,000, 300,000. It's just the way the game goes, right? You're not gonna turn 10,000 into $1 million. That's not gonna happen. You gotta go through the journey. So let me put that out there. If you want to learn a blueprint on how to become $1 million trader, support the Wall Street Trap. Make sure you like and subscribe right now. I promise you, this one video right here will 100% change the game for you. Let's go. You gotta decide first and foremost who you are as a trader. Your investor identity. And we're gonna bring this down to this blueprint. Right? This is a blueprint on things that you have to consistently decide, right, as a trader. The biggest thing you can do is also take notes along the way. Because as you're taking notes along the journey, it's kind of like your roadmap, what you're going to follow. Right, so this is not getting into patterns and charts. I can tell you right now, there's people who can chart way better than me. I'm not there. I only use maybe 3 or 4 technical analysis things that I use. But again, last year we made $2.4 million in the stock market, $2.5 million in the options market. We did another $500,000 in the buy and hold market. It is what it is. My proof is in the pudding. Right, so you talk to somebody who's done it, and that can't be denied. What we cannot deny is what a person has done. So the first thing you gotta ask yourself, what are you? Are you a day trader, meaning you're in and out of trades every day? You might do a little scalping, that's cool. Are you a swing trader, meaning you go out a little further? For me, my swings started about 4.5 months, 5 months. So that's my swing. Or are you elite trader, right? Are you going from, to me, it's usually 12 months, but I like to say from 10 to 12 months. 10 months or more puts you in the elite option game, right? There's pros and cons to each one of these. You got to decide which one. Most people like to start off here because this is probably the cheapest way, right, to get in the game. It's going to cost you the less money, but it's the most volatile way. You know what I'm saying? Swing trading can be a little bit of both, but then you can be elite trader, but this one's going to cost you a lot more money. These, and when I do leap options, they probably start at about at least $1,200, $1,300, right? And they can get really expensive. Like last year, 2024, when NVIDIA was really like up there, like I remember paying, $9,000, $14,000 for a contract. You know what I'm saying? So it can be real crazy right here. This can get out of, these leaps can get out of hand, but they have a better upside to it. So for me, I think this is actually the sweet spot, but I bring my swing trades anywhere between 4 months and 8 months. This kind of my sweet spot. This is definitely my sweet spot, that 4 to 8 months, right? It's a perfect agenda for me. So one, you gotta learn, like, I'm not saying you can't do all of them. I'm saying get really good at one of them. Like really get good at one. Now inside of this, if you day trading, you also, like if you're a chart reader, you're gonna want to know what candlesticks are you looking at. What's that time frame you're looking at to use? So for me, that's not really a thing for me when I'm in here. Right. The next thing you need to understand is like what are you willing to risk per trade? Right. Some people say 1 to 3%. Right. Like I'm gonna be real with you. I'll be risking. I'll be putting 10% or better up per trade. But I got a bigger account. But I've been doing that. You know what I'm saying? So one of the things that I have really learned is that I don't want to say this to like disregard nobody. That's why I say investor identity has to be important for you, right? One person, your risk tolerance is important. One person can risk $1,000. Like you got a $10,000 account, yo. Like you don't really want to risk that much. If I had a $10,000 account, yo, 10%. I'm putting a rack up there. I'm going with my move. You know what I'm saying? But I'm not gonna lie. I'll even go further than that. I'm putting $2 grand. You know, like it's where your risk tolerance at. So I'm somewhere in between. I ain't gonna lie to you. I'm in that 20 to 30%. Well, I'll do this. I'll be honest with you. Cause I'm anywhere between 15 and 30%. I'm anywhere between 15 and 30% per trade every time. Real talk. But I'm gonna say this. I play big. I win big. I've had some big losses. You know what I'm saying? I'll keep it real with you. You know, this ain't no, I'm not gonna lie to you. You know what I'm saying? I've had a $120,000 loss. I've had a $500,000 loss. And I'm not just talking about a paper loss. I'm talking about realized loss. Cash out. It's over with. Lock up the puppies. So I've been there, but my skin is super, super, super thick, y'all. Because I love the game and I believe in the game. And I know the game has made millionaires, the game has made billionaires, and the game has made me a millionaire. You know what I'm saying? Real talk. I know some people gonna talk smack and all that, but again, what you cannot deny is the results that I put up. I made 6 millionaires in my Patreon group. That is result that you cannot, deny. So we don't really care about haters, because that's what we do. The next thing, you need to decide where you at. What's your comfort zone? Am I good risking 1 to 3%? And I'll be real with you. If you're in this leap swing trade thing, you automatically gonna X this out. I'm be real with you. If you go in swing trade or leap trade, you automatic. You ain't here. You're not there. You already somewhere here. I'm be real with you. You're not even here. You somewhere around. You starting at 6%. When you go swing trade and you go, and if you come in here, so understand. So for me, I understand this is my sweet spot, and then I'm here. So I've already identified like where I'm at. So 2 things I got out the way. The next thing I gotta ask you, so where am I? Am I options trader? Am I messing with the futures market? Am I messing with Forex? It's important. I'll try to do them all. Find one. For me, I'm here. So I knock 3 things out the way. I know I'm a swing trader. I know that I play leads. I'm a swing trader. I'm also in this 15 to 30, but I'm also play the options market. The next thing you need to understand is this, y'all. The roadmap. What is going to get you there? Right? Like, what is going to get you where you got to be? Some traders are all technical analysis traders, right? And that's good. Like, I don't have a problem with that. Or you can be a fundamental analysis trader that adds some technical analysis in it. That's kind of where I'm at. For me, I'm like this. I'm probably like 70-30. I'm technical. I'm fundamental because I only trade certain type of companies. I only trade companies that are that have strong moats. I only trade companies that have advantages some type of way. I only trade companies that have pricing power. Like, I only trade companies that have strong balance sheets. Now, inside my options masterclass, I go over the specific chart of company that I trade. The specific type of company that I trade.
Like what,
I go through that
bro?
in the options masterclass. But you can be reversed. You can be 70-30. Some traders don't even care about fundamentals. All they looking at is the technical analysis. That can be sweet for you too. Again, identifying these are super important for you. So the roadmap, what gets you there, is important. Right? You gotta know. And you can be 50-50. You figure this part out here. Like, I'm telling you this because, y'all, you get this right. The only thing you gotta master now is your emotion. And the easiest thing to master about that, we're gonna get to that, right? The next thing you need to understand is this now. Once you understand the type of trader you are, you understand the risk that you're willing to take. You understand the roadmap, meaning what are you gonna use to get you there? And now you understand what market you in. Options, futures, or Forex. You understand these things. Next on the line, this entry is super important. When you get in this trade, it's so important. You need to know, are you getting in on pullbacks? Are you getting on breakouts? Or crossover?
Bro, we are not qualifying, bro.
Y'all didn't know I was gonna do that. Y'all didn't know I was gonna do that. Y'all didn't know I was gonna bring that up. Yes. Right? You wanna know which one of these you're getting in? Meaning, like, is it pulling? Is the market pulling back? Is the market Like it done filled the gap, shot up. Has it crossed that golden cross? Come on, come on. You need to know that. But watch this. There's a leg that we added to this, and it's the cause. This is something people don't talk about. The cause. What caused one of these to? Nothing in the market just happens. Everything in the market is a byproduct of something being said or something being done. Nothing just happens. It's your goal to figure out the cause. So, was it some type of news that came out? Was it some earnings, or was it any type of economic or inflation data? Right? These are things that's really going. So people's emotions are tied to events. Nobody just wake up and be like, I'm scared, I'm scared, I'm scared. There's an event that takes place, and from the event that takes place, the event causes an emotion. Right? So you need to understand what is the cause, right? Was it the news? Was it some earnings? Or was it some type of economic data? Right now, the data can't go as news, but the data, I'm looking at, when I say news, I mean like, did the CEO do something? Did something happen with the company? Geopolitical, is there a war going on? That's what I mean when I say news. Earnings, did the company do well? Did it not do well? Right? Or did the company put out, like, did the earnings call produce some more good news, right? Or was it some type of economic data? Was it CPI data, PPI data, retail data, housing data? These things are important because this gives you what's called a story. Right? So we looked that up, right? The type of trader you are, the risk that, how much capital you're willing to risk, the roadmap, what's going to get you there, the market, and now what are your interests? Right? Now I'm going to take you somewhere good here. Stop. Man out. We need to understand. Are you getting out of this trade or you stop? Do you have a dollar amount? Or do you have a percentage that you're looking for? Right, so when you get in the trade, you need to be knowing when you're getting out the trade. Pre-trade. Okay, not in the middle of the trade.
You like it.
Okay, not when the trade done lost this much money or won this much money. Pre-trade, you need to know, I'm getting in here, pull back, breakout, crossover, based on this news, based on whatever, and when I get in, I know exactly when I'm getting out, at a dollar amount or a percentage amount. It's up to you. For me, I'm a percentage person. Right? You learn these things. Watch this. The last thing you need to learn is whether it went right or wrong, what lesson did you learn from that trade?
What the fuck is this boy?
Oh my God. Whether it went right or wrong, the way that you become $1 million trader, after you do all this, you need to ask yourself, what went right in this trade? Journal it out. What went wrong in this trade? Journal it out. That what's gonna happen is, while you not active, you looking at this saying, this what happened, this what didn't happen, this how this went. This is how you, I promise y'all, this is how you become $1 million trader, y'all. And I promise you, it's easier than it's. No, it's not. It's not that. Yes, it is. Yes, it is. Again, for the people who are saying that, I'm talking to somebody who made $1 million in a trade, 1.2 to be exact. Go check out my Instagram. It's on there. I was lifting weight, and my dog Jose was on her. I said, dog, it hit me. I jumped up. He showed a trade, an NVIDIA trade. I made $1 million in a trade. That's one trade. We did $2.5 million last year altogether in trade. Wow. We did $500,000 in buy and hold last year, and we also did $860,000 in a 6-week time span to get this build. Did we take losses along the way? Hell yeah. It's part of the game. You can't avoid it. That's it. The type of trader you are, the risk that you're willing to take, the market that you're going to, what's the roadmap that gets you there, what's your entry price, what's your entry, pullback, breakthrough, breakout, crossover, what is causing the thing, what is the dollar, the stop or the percentage, and then what is the lesson? Come on, man. I promise you. That right there, somebody trying to sell you that for $19.97. I promise you.
He won.
Listen, man, it's your boy, the Wall Street Trap. Listen, I hope you learned something from me just now, right? I want you to rewatch this video a couple times. I want you to share it with somebody. I want you to like it. I want you to get in the comments.
It's two.
Tell me how you feel about this, man. How can we help you, man? It's your boy, the Wall Street Trap. Listen, man, make sure you catch us each and every Tuesday on the Wall Street Looks Like Us Now Network. 7 p.m. Eastern. We definitely give you a bunch of free game. And also just make sure when you look in the chat, man, somebody telling you about Bitcoin, somebody telling you, call Lisa, I can't think Harold enough. That ain't me. I don't know what the hell people is doing. Don't get caught up for that, man. It's your water boss, you travel. Salute. Candle is green, or even though a candle is red, the wick can tell you that if it's a red candle with a long wick right here, that means the buyers tried to push that price up, but they got rejected. So the candle is red, so the sellers really won that. And then when you see the wick coming down, for a fact that the sellers drove it down. And this one day, they drove it way down here, but because it's red, that means the sellers won that day. So if you see a candle like this, which is green, and you like, well, Trap, this is a green candle, but they got a wick way up there. That means even though the buyers won this day, the sellers drove it down here, but the buyers drove it way up there, right? And so if you look at a candle like this, you say, hey, Trap, this candle is a red candle, but the sellers drove it way down here. The buyers drove it way up there, but at the end of the day, the sellers wound up winning that, which means it closed lower than it opened. So if you see a red candle, just know it opened at the top and the bears pushed it down to the bottom. Now, if it's a green candle, it opened at the bottom and the buyers pushed it up to the top, but it closed at the top of that. So remember that as you're looking at these candles, that's how you start to identify what's truly happening. So what I like to do is give you a body of work so you can understand what we got going on. All right, so today, your boy just been in a chart, so we've been looking at Meta. And so what we looked at today was, I have been looking at this. I'm gonna explain what I got here so you can understand it. So right here is called a descending, broadening wedge. Right? So this is a wedge. Think of it as a tunnel. It's descending, which means it's going down. But it's broadening, which means it's opening up. Think about it like a bell bottom. Right? You know how a bell bottom is? So the bell bottom has one thing, but when it gets to the bottom, what does it do? It opens up. Think of this as a bell bottom. So this is called a descending, broadening wedge. So it's a wedge, but it's descending because it's going down, but it's broadening as we go. Now, typically, this going tell you that a reversal has taken place. How do you know a reversal has taken place? Because if you look here, you see that this trend, so you see this trend right here is about sideways.
Good work. Now
all right.
Up. You're not done yet.
So this right here is about sideways, right? Probably can go back a little more, but then you saw this trend come upwards, right? So if now we go down, this is a reversal or a change in the trend. It's a change in the pattern. Does that make sense? So right here, you had a trend that was sideways, it was ranging. Typically, when the market is going sideways, nobody is really winning. It's just they scrapping. You know what I'm saying? They scrapping right here. See, this is going sideways. Right? They going sideways, so nobody's really winning here, and it's bouncing in the same area. So it's bouncing off this top right here, and it's bouncing off this low right here in this pattern. Right? So in this pattern, you're waiting for what's called a breakout. So somewhere here, you need something to change. Because here, people just get ate alive. Right? Unless you really, this day traders world right here, they love it. Day traders playing each one of these days. I'm not a day trader. I swing trade and do deep swings and I do leap. So my play is gonna be 4 months, 3 months, 6 months, 4 months, 8 months, 10 months, 12 months, 1 year. Right? But we've been getting in the charts because listen, we gotta add more tools to the belt. So let's go. So so I always gotta say, in order to know where you're going right,
bro, there's 2 different snipers over here. All right.
Because when you go up the hill, how to move right. You feel what I'm saying? So think about that. When you look left, why you gotta look left first, Trap? Because this is where all the data at. This tells us a story, and once we can understand the story, now we can know how to move forward.
What the fuck?
Right? And once you get really good, you can almost kind of anticipate.
We all got dropped? No way.
So we see this sideways motion, and then we see the breakout here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So for 17 days, Meta broke upwards. Each one of these candles represent a day. Out of 17 days, days, you had 1, 2, 3, 4 days where it pulled back. But then after these 17 days, right, you got this engulfing downward push. So that's when the sellers came in. So from here, you see the market start going down, right? You see the market going down. This is our wedge.
Pulling up.
This is our descending wedge.
Go up the stairs. Hello?
This is our
Can't go up the stairs in that
wedge.
bitch?
See, it look like a bell bob. All right. So this typically tells us that there are lower lows taking, there are lower highs are taking place. But I'm gonna show you something inside of there because things can get really tricky. So here, we're watching this take place. So now, these candles, these are telling us, hey, Trap, it's going down. But the crazy part about it going down is gapping up, but it's coming down. So here's how we create this wedge. Now, the important part about this wedge is why I got my wedge here, because I wanted to touch these points. I actually could have pushed it back a little bit so I can touch these points. So you want to touch these points because this is what it's anchored to. Now, on the top side, you see it's not breaking this wedge. That's what we come in at today. Because once it breaks this wedge, now we have to take in a different type of dab. Come on. Y'all with me right now? All right, let's backtrack a little bit. I need you to walk with me right here because this is going to be important as we dig into how we get this play. So we notice that a broadening, a descending down, broadening, you can see it's opening up wedge, right? This is typically a reversal pattern because to go down, you had to be coming up or going sideways at one point of view, right? So now you went up for 17 days and then you went down. For the most part, you went straight down in this area, right? You went straight down and then you started getting some different type of movement, but we'll get into that. All right. Outside of the wedge, the next thing you see is this yellow line and you see this turquoise line. Those are going to be important for us as well. Why? Because the yellow line is our 20-day simple moving average. What does that mean? That means this is where the stock been at. It's going every 20 days. This tells us, this talks about what a stock price has been for 20 days. That's going to be important for us. And this turquoise line is what a stock been at over a total of 50 days. Now, the important part about that is on top of, you notice all of this is below the 20-day. Now, for all my day traders, that's watching the fight close up. So if it's under the 20-day, that means that's not a bullish pattern. That means the market is actually being bearish. Under this 20-day means the market is being bearish. But it's still but it's under the 50-day as well, so that means super bearish, right? Now, check this out. If it was on top of the 20 and on top of the 50, then you know you got a change in the trend that's going on. All right, y'all with me right there? Y'all with me right there?
Yeah, sorry though.
Let's go a little further. So what happens is, in this area, something happens. I like to use yellow because it's easy. In this area, you see a doji candle, which means neutral. Buyers don't win, sellers don't win. And you see it's almost the same. And then the next candle from there is a overpowering. They call that an engulfing candle because it overpowers this next candle. That means buyers jumped in. But then the next day, sellers jumped in. And then the next day, buyers jumped in really, really, really heavy. And then from here, you saw sellers come in over these next couple of days. And then you had buyers, a gap up, sellers, buyers. This is important because this is an even day.
Who has the fucking rocket launcher, bro?
You have this. So here's what you have. From here, you have bam, bam, bam. We're gonna talk about that. I like what we doing right here. I like what we doing right here. Right? So right here is important. I'm gonna tell you, now Trap, why is that important? Well, because I'm not a day trader, right? Shout out to my day traders. Because I'm not a day trader, I'm looking at this like, yo, the market isn't giving me nothing that I want right now. And what do I mean? It's not giving me a real good structure right now.
Talking about how you had a YouTube channel, you went 05.
Lower,
and ain't contributed to no point.
Structurally giving me what I want, right? I like structure. Structure means, and I'll talk about what structure means, right? Now, what I will say is, once you get a pattern from here, okay, let me back up a little. Let me tell you something. Structure means you can 100% identify the market's body type. That's good right there. That's good right there. Remember, this gave us a structure. This was sideways. This gave us a structure. This gave us a structure. But right here, it got really erratic, irrational. Right? And so now, here's what happens. Let's talk about something, what I got wrote down. So you see this line, 38, you see that 5, you see that 6. That is a Fibonacci thing, retracement counter. What that does is it's telling you levels where the market can do something special at. Right, so what we did was we got to this low point from this high point right here, and we bring our Fibonacci all the way down to this lowest point right here.
Push up.
And what that did was it says, okay, Trap, because this is a downward trend.
Fucking bitch
this price could possibly spike right here. And if I wanted to play the downside, right, once it gets here, which means it has now popped up 50% of what I want, because it's in a downtrend, it can come down. Now, the dope part about this is, because we got the wedge, if it breaks through our wedge, that gives us a bullish indication. Hear me well right here. I'll tell you why this is a bullish indication. If it breaks the wedge and then come on top of our 50-day, that is a bullish situation going on right there. Because it broke the wedge. The wedge, look at the wedge as a restraint. It broke the wedge. Mind you, this wedge has been trading at foot. Watch this.
Come on. Why am I stuck? Yo, that animation is far too long.
13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4, 5, 6, 7, 8, 9, 30. 1, 2, 3, 4, 5, 6, 7, 8, 40. 1, 2, 3, 4, 5, 6, 7, 8, 9, 50, 50. For 51 days, it has not broken that wedge.
Oh,
51 days
shit.
It has not broken
Oh my
that
gosh,
wedge.
I was gonna put him down.
But the last 3 days, it hopped 40, it hopped above our 20 days. So watch this. For 47 days, not only, I'm giving you,
the hill is a hill
for
right up there.
47 days, not only was it not breaking out our wedge, but it also was under our 20-day moving average and our 50-day.
Damn, they're gonna get this one too.
Come on. 47 days, which means it's what? Downtrending. 47 days, it was below our 20-day, and it was below our 50-day, and it was inside of the wedge, which means the market is still downtrending. Oh, man. Oh, man. Oh, man. I like what we doing right here, right? But what happens here is important. What happens in these 4 days is it hops above the 20 days. Okay, it hops above the 20 day and it gets closer to our wedge. Now, here's something that's about to be important. Okay, we're gonna go deeper right here. Y'all with me right here? You trapping? You trapping?
We gotta get him.
I'm breaking it down to you. Now, here's something that's important for us to understand. In this area right here, this has been, let me break this. This area right here, this is gonna be good. You gotta see this, because it's gonna be important for y'all to understand.
GG.
This area right here
Better luck next time.
has acted as resistance. But it started way back here. The thing about the charts, what I've been learning that's really good is that support comes resistance and resistance turns into support. So watch this. There were a few times, well, I mean, it was support here. The bears pushed it down and it didn't go further. So it was support here. The bears pushed it down, stop. The bears pushed it down, stop. The bears pushed it down, stop. These 3 instances, the bears pushed it down and it stayed there, then it popped up. Stayed there, touched it, popped back up, right? So when you got here, it then turned into resistance. Why do we know it turned into resistance, Trap? It popped up a little bit here, came down, popped up, came down, right? Popped up, came down, right? Didn't stay too long. Now, when I look at support and resistance, I always look at a range of a couple dollars. Never just $1 precisely. I always look at it as a couple dollars. So watch this. Watch this. It's gonna be good. It's gonna be good. The next thing you see happen is, today, we saw our 549 area, which was important for us. So mind you, watch this. Watch this. We saw the 549 area today where the market closed at. This is how I wound up putting the play in. We're gonna execute. So the 549 play got called. I mean, the 549 play. Now watch this. The bears pushed this thing down to about, I don't know, maybe 540 something. They pushed it down today real heavy. Watch this. After earnings, it popped up. Now, Trap, make this make sense to me. Why am I looking at this? I understand what you're saying. But we got to make some more key areas. Remember, watch this. This is essential for us. Because if it can pop here, if it can break this 50-day, bust outside of this trend, watch this. We know we got some action going on. Okay? Now, we know the high so far has been 740. Right? Because that's what this is right here, 740. So we drew our Fibonacci from the high all the way to what's called the swing low. So we can have a zone that it can tell us where this goes at, we can strike at. All right, everybody got that so far. We good, we understand what's going on. All right, all right. So for me, watch this. The earnings came out and it broke our trend. It broke the wedge. Not only did it break the wedge, but then it entered into another trend zone. So with our Fibonacci gets retracement zones, but because it's a downward trend, these are great places to put puts in. But for me, what I saw was, once it swung past the 50-day, I made a switch. I said, oh, earnings hit, this is a switch. So watch this. We're gonna go to another. Listen, y'all, this how you gotta, this been rocking. So the last 3 plays we've been putting in, they've been going crazy using the charts. So watch this. So what we did was say, oh, switch. Because it broke on top of that. Now here's the thing. Let me go back right quick. I gotta say this. We can't put in a play tomorrow until we understand where does it open at. So if it pops up to, is that 171, 175 right now? That puts us here. If it pops up to here, which is about 589-ish, something like that. If it pops up here and comes back down, if it pops up here and come in, then you can play puts. It's okay. You know it's going back in a down direction. I want it to stay above this. If it stays above this an inch higher, so I'm gonna watch that first hour of the market and see what it does, right? Because here's what I think. This is my perspective on it. This is my forecast. I think we go bullish on it. We broke the pattern here. We see before I put this up, we are here at this point. It's at 575 right now, which means this candle, the next candle is gonna gap up probably in the morning. It'll probably be here, or it'll probably be semi. to probably come down. It came here. 575 is probably gonna gap back down to this 560 range. Right? So what we wanna see here is, in the morning, we wanna see if we can get somewhere up in here. So here's what I wanna do. If we can get in the morning and they can be in this range, we now know we are well above our what? Our 20-day. That means we above our 20-day and we above our 50-day, which tells me we have now entered a different type of pattern. Why? Think about it. Now you've come from here, you're low, you've consistently broke trend, and you come here. Let me give you another candle so you can see it. It'll look like this. I should have put a line chart. Right? That's essentially what we've done. This tells me that there's another structure. Remember we talked on this page about what? Come on, y'all. I know y'all rocking with me. On this page, we talked about what? Structure, structure, structure. And right here, it got confusing. It was sporadic moves. Right? So we come now, in the morning it's gonna be really key. It's gonna be really vital where this thing open up at. Right? In the morning it's gonna be vital because check this out. Remember, this was our low. From up until that point, we were right here. Not no strong structure. But now after earnings, we popped up here. So it might end up somewhere around here. It's about 165 as we shoot this video. You want to see what it does, where the gap is at. If it pops past this 61 in the Fibonacci, that gives us a good situation, right? If it pops past this, which is 575, so we pop up to about 573-ish, that's a good place for us to enter a trade. If it goes, 577, 578, so if it can get in this range, you pop past 575, the Fibonacci tells us this is a good trade to make. Anywhere in here is a good trade to make. Why? Because now we in that golden zone. If you wait a little further and say, Trap, I'm gonna get some more reassurance, I won't wait till it pop to that, till it retrace 50%. So if you retrace 50%, that means at some point it done did this, which means it has now retraced half of where it was at the bottom. That's what that 5 represents. That 5 represents that 0. That means we done came half from the bottom. Now you done made an even better trade on the bullish side. So for me, I'm willing to take a little risk. I'll come here, which is about 578, 580, something like that. 580, 588. This is a good range for me. So I want to get it in this range. So if I can get it in this range, now watch this. This is the amazing part. You already know that the high was 740. But I don't gotta go that high. Watch this, because here's what we figured out. We also saw that in the process, this range right here, which is about 630, has always been resistance once it got, support once it got here. All the way across, look. You hit it, come down. Hit it, come down. Hit it, come down. Hit it, come down. Almost touched it, came down. Almost touched it, came down. Hit it here, came down. But the bear still won it. You feel me? So you see that all across here, that 644 has been what? Resistance. So what we can do is say, okay, if we know that 644 has been resistant, it's a good time for us to make a play, and we can put, just to be on the safe side, we can say, hey, Trap, I'm gonna go with a 620 play or a 600 play. Safe side. Not too bullish. Safe side. Watch this, Trap. You get hit 600. If I get in at 580, Trap, I put a 600 call in on it. Guess what, Trap? $20 move is what I need.
Thank you. Tastes good. I can't tell.
Come on, man.
Look.
I need y'all to understand what we doing right here. So all I want you to do in the morning is say, hey, Trap, I just want you to look. If it bounces, so if it opens in the morning around 560, because I think it's gonna pull back. Here's the dope part about it. The IV crush gonna bring it down, imply volatility, which is gonna actually make the options cheaper. So if it come down to maybe 560-ish, right? You wait and see if it goes back up to what? 575. You don't gotta try to be aggressive here. Let the market tell you what it wants to do instead of you trying to anticipate. We're gonna look left so we can move right. We're gonna look left so we can move right. If we can get it, if it can bounce back up around, if it opens at 565, something like that, and it pushes up to 575, strike. We get in that zone, 576, 577, 580, you can strike. You can make your 600 call.
Make sure to hold on to it.
Once you make your 600 call, boom, you stretch that thing out, maybe 90 days, you do your 6, and it, come on, man. Now, here's what you're gonna be cautious about. Tomorrow you have Apple earnings that can drive the market down. My last 3 plays that we did with technical analysis was QQQ, Lily, Spot, Visa, Netflix. As of right now, we 5 for 5. Straight off technical analysis, we 5 for 5. The last was Spotify. We got that thing dead on with the technicals. We've been on a 2-day run with it. Real talk. It's on my Instagram, wall_street_trap. Go check us out. So, man, look, I hope y'all like this video. We definitely want to bring something new to y'all. Just getting on the board, getting on the charts, explaining to y'all a couple things. Yes, Trap is adding charts to his playbook. Trap is adding charts to his bag. Why? Because I want to be an elite trader. I'm already killing it, and from the buy and hold, we've been killing it with the elite options. We want to add this in. I'm definitely not going to be a day trader, though. But adding these charts to our resume, adding these charts to our tool bag only makes us better. And what we want to do is try to make you all better, help you build legacy, help you get it out the market so you no longer have to get it out the mud, man. It's your boy, the Wall Street Trap. I love y'all. I appreciate y'all. Make sure you like. Make sure you subscribe. Make sure you send this out to your people. Tell us in the chat how you feel about this video. You be careful, because that's not us telling you about WhatsApp, and that's not us telling you Bitcoin and all that, man. You know, we straight stick to stocks, man. It's your boy, the Wall Street Trapper. Salute.
When fear hits the market, wealth doesn't disappear, it transfers. And right now, while the world's panicking about tariffs and China, the next generation of wealth is being quietly built right in front of us. Now, today I'm gonna talk about 3 companies that's sitting at the frontier of America's comeback. And if you miss these before November 1st, you might be missing out on a 10x return from the side. But before I get into that, man, first I want you to like and subscribe to the channel, man. I won't say this, and I won't go into this moving forward. Everything we put out on this channel is based on research and information that I've broke down, right? So we're not just guessing here, right? I also want you to understand the market's going to be up and down. And while the market is truly running sometimes, it can be one tweet or one headline that truly stalls that, but it allows us to get these companies at a discount because it'll put fear in the market. And a lot of companies that get overextended in the run-up, when Trump puts out a tweet like that, like he did 2 weeks ago, what that does is it holds that. And these companies pull back. And sometimes the companies that grow a lot, that are on a rapid pace to grow, they tend to do what? Pull back a little. And when they pull back, it truly gives us opportunity. Opportunity to what? To buy at the companies that we like over the long term. Now remember, the market goes up 76% of the time over what? The long term. So it means we have a 23% chance of the market pulling back from time to time. Those are opportunities for us to build our wealth. Those are opportunities for us to implore more cash into the market. Those are times for us to double down on companies that we love. So if a company pulls back or the market pulls back, it's not the time for us to get scared. It's the time for us to do what? Buy more. There's a stat out right now, and I've talked about it on my show, Trapping Tuesday.
And the stat is essentially that more people are buying the dip now this year more than ever. And it showed it in April. It showed it again in July. Well, early October. And it showed us that. So I don't want a lot of people to panic when the market starts to pull back, or you bought a stock and the stock pulls back and it drops. Don't panic on that, man. We buy great companies. I want you to put not even a 50-year time span on. I want you to put a 1 to 2 year, 18 months to 3 year time span on any stock that you buy. Yeah, it might not be up right now. Yeah, it might run up and come back a little bit right now, but that gives us a great opportunity to buy more. Now, before we do that, let's just get into it. Let's just recap some of the stuff that's been happening of lately. So let's think about it, right? 2 Fridays ago, Trump shocked the world when he came out with his 11 o'clock statement saying he's going to put 100% tariffs on China because they are having a rare earth. They're trying to be controlling in that, right? And it scared the market, right? And that volatility, it doesn't really destroy wealth. What it does is, it is uncertainty, but what that does, it gives us and exposes us to opportunity. The key is understanding that where the world is going, not where the fear is pointing. I'm going to say that again. The key is understanding where the world is going, not where the fear is pointing. The fear is really truly designed to trick y'all to spot. Now, over the last 2 weeks, we've seen markets stall. New highs, no new extensions, right? The tension was building, right? And the tension always leads to transfer from weak hands to patient investors. So instead of running from the red candles, I want you to run toward where the red candles are taking position from. Now, let's dig into that a little bit deeper before I get into these 3 companies. If we think about it, the last 2 weeks, we haven't gotten back over the high of Friday of Trump's tweet Friday, and we haven't gotten to the low of Trump's tweet of 2 weeks ago. We've been trading in that range. And as a trader, we call that choppy water. And some companies get exposed more, some don't. But here's what we do know. The Federal Reserve all about to turn the money printers back on. Also, we had some key data that came out Friday that lets the market know that inflation is kind of where they want it to be at. So which means companies that are in truly growth phases, they're going to get what? More money poured into them for companies that want to do what? Expand and grow. So now, let's talk about the 3 companies on the front line of the next boom. The first company I want to talk about is STS Space Mobile. It is building space-based broadband networks that connect everyday smartphones directly to satellites, right? They're bridging the gap between people that can't use phones and people that can use phones. I want you to think about it from this perspective as well. There's 5 billion people that have mobile phones across the world. 400 million without access. And now governments, carriers, and providers are trying their best to make sure those people can get what? Access. Now, this company has partnered with companies like AT&T, Vodafone, and Horizon. Now, let's go a little deeper than that. I think that if the stock can get around about $50 or $55, that would be a steal because this is an infrastructure pipeline, right? This isn't just some type of mobile company, right? They connecting us to telecom, they connecting us to AI, they connecting us to robotics, they connecting us to the next world. Now, they do have a lot of satellites that they're doing, and if they can get that to go, and I wrote this down right here, if they can get that efficiently running, then it is an early stage story, right? But they have a huge upside, and if they can get that officially going, we see the stock is up big on the year, so that pullback didn't really hurt us. It actually gave the stock a breather. So if they can get things going the way we think they can get things going, the way the researchers getting things going, I think if this stock gets to $50 to $55, it would definitely be still one that we can truly put our eyes on. Now, next on the list, we have an amazing company, APLD. Now, I'm not gonna lie, I talked about this company in my Patreon maybe like 5-6 months ago, right? The company was dirt cheap. It has been on a run. It is one of our lottery picks. Shout out to the Patreon, right? APLD, while everyone talks about AI, no one is truly talking about the power or the cooling that keeps AI alive. Now, let's go a little further. Now, APLD, they build the infrastructure and the intelligence for massive data centers designed for high-performance computing. Now, remember, high-performance computing is where we are headed. It is where we are going. It is 100% the game changer, right? Also, when you think about quantum computing, the CEO for RG, Rajetti said that we're about 4 years away, which is closer than the years of with that Gen Z mindset, right? Now, let's bring that back in a little bit further, right? As AI becomes the backbone for everything that's going on in America and the world, guess what? It's going to need a lot of energy. Now, contracts, this company has contracts with top tier hyperscalers, right? And they're building liquid cooling technology, which reduces the energy waste by 30 to 40%. It's expected. They're expected to grow 25% just in the data infrastructure demand alone. AI isn't slowing down, y'all. We know that. It's scaling up. And APLD is who they call when they need the power. So we think about a company like that. Remember what I said, y'all. Like,
they're utilizing
the fear doesn't transfer the wealth, right? It actually gives us it actually gives us an opportunity to position ourselves in companies that you may have missed, companies that have been overextended. Don't think about today or tomorrow. Think about where could this company be in the next year or the next 18 months or the next 2 years. How could that look in my portfolio? And that's how I want to do things. Now, let's go a little bit further, because if ASTS connects the world and APLD is the power, this is a company that I'm sure you love, and it's a company of USAR. They supply the materials it's built from. Now, they operate the only full integrated rare earth mine in America. Raw extraction to truly just finished magnets. Now, talked about this, saw the lady, she just did an interview on CNBC, and she talked about how positioned they are. She talked about how much growth there and the possibility they have. She actually just did an interview Friday, which was dope, which is actually one of the reasons why I'm dropping this company too, because I still feel like this company has so much I feel like this company has so much strength and so much growth. And when I called it on the show on this page, it was $24. The company, I think it was 40. It went to 42. Trump dropped the tweet, and then it sells all this back down to $24, which is cool. We back where we started from, and I still think it has upside. But if you're scared to get it right now, I think somewhere around $17. If you get that $17.20, I think that's the easy steal without even thinking about it, right? No, let's just dig a little deeper. Rare earths aren't just because they're scarce. They're rare because China controls 80% of the processing. These metals, listen to me, everything when it comes to EV, motors, fighter jets, semiconductors, MRI machines, and healthcare, right? Department of Defense has committed $400 million to this company alone. They have an Apple partnership. They've partnered with the U.S. government to reclaim the supply chain. This truly becomes what America needs, not just a want. They need this, right? So anything under $20 is not hype. It's homegrown security. These are companies that I'm saying in the future, y'all, like, we can win with these. We just got to be early sometimes, and that's okay. But let's just put it all together, like from connectivity to power to materials. These are the foundations to every technology boom. The Fed will start cut rates probably, right? That's capital that will flood into growth and infrastructure. Who builds from that? Who benefits from that? These companies building the new economy. Now, think a little further. This isn't about predicting the next tweet. It's about positioning ourselves before the next wave. Fortunes aren't built just by calm markets. They're built in stones, and volatility becomes the thing that helps us get to where we want to go. Because one, it gives us a discount, and then when everybody calms down, it becomes the thing that moves the market. Think about it. The only thing that really stopped the market was Trump. The only thing that got the market back going was Trump saying, I think we're going to do business with China. Trump came back a couple of days later and said, what? The 100% tariffs aren't what? Sustainable. Which also let us know, okay, he understands the game. He understands where he's going at, right? And we got to just be willing to navigate through that. And we can't just get pissed off every time this thing don't go our way. So ask yourself this. When fear hits, do you freeze or do you position? Now, I want you to think, which one of these companies, ASTS, APLD, or USAR, which one do you think will lead America in the next wave? Because remember, wealth doesn't vanish.